the full backgrounds of the panelists. But we have Pawneet Abramowski, who has over 20 years of experience in financial crimes and compliance and works with fintech companies. We have Keith Herman, who is a serial entrepreneur and has been investing in and involved in technology for the past 30 years, and himself raised or been part of raising over $500 million himself. And then we have Barrington Dyer, who is an intellectual property litigator who helps defend people's intellectual property, and in a former life was a coder, which he brings to his expertise. And also all three assist and counsel all fintech companies, but especially in the blockchain space. So in starting out, we thought that a lot of people throw around the words, AML, KYC, but what does it really mean, and what is it in the greater overarching landscape of blockchain and financial technology in general and the regulatory landscape? So we wanted to open up with just a brief kind of explanation and description of where identity management, what it is, and the purpose of it to help shape our conversation.
Yes, I'm the resident compliance officer here, so I will go first. And I appreciate the previous panels kind of referring to AML requirements, AML, KYC. AML, anti-money laundering, as it's known, has been part of the compliance requirements for banking and financial institutions for a very long time. Bank Secrecy Act existed in the 70s. Was enacted in 1970, so it's been around for a while. Anti-money laundering, the term AML, kind of became mainstream after 9/11 when there were requirements from the USA Patriot Act that were imposed upon financial institutions to gather information, identity information for your customers and perform due diligence. Now that AML has crossed over into many of the other industries and certainly has impacted the digital cryptocurrency industry as well, and has been evolving. Is there anything else that you guys want to add?
Well, I would add that, excuse me, that traditionally identity management is handled by government institutions, and verifications are done at various different points. And I think that's relevant and is going to be pertinent to the latter part of our conversation. So I'll just keep it brief at the moment.
Okay, and so in all of this, the reason for the verification is to make sure that you're not giving the wrong people, you're not letting the wrong people give you their money, right? So trying to protect from terrorism and things like that is where all of this initiated. And so can you help us understand in blockchain, where is the problem coming with identity management and verification?
Well, with blockchain, the blockchain will actually resolve the problem. The problem that exists is in the current state because identity is being managed in many places and breaches are occurring everywhere. By utilizing the blockchain, that will be something that will be resolved, and verifications will happen electronically. So it's going to be a very different, landscape moving forward from the way things are currently, the way they currently exist.
So financial institutions today perform a combination of automated processes and manual processes. There's two forms of verification: documentary and non-documentary. Non-documentary are the quick and dirty, 30 seconds, you input your information, and the financial institutions, with the help of the various vendors, are able to verify your identity and come back to you, say, hey, thumbs up, your account is open, you're good to go. And the non-documentary process takes longer, and for For entities that are opening up accounts, it sometimes gets even more arduous and longer, where you have to go back and forth in providing additional pieces of information, not only for the entity itself, but also for the beneficial owners of the entity. And that's where it gets a little bit hairy. And I think the previous panel kind of mentioned that aspect of individuals and entities that are trying to establish accounts really get skittish in providing certain types of information, and that's when you realize that you may not want to establish an account. So the process is very labor intensive. Operationally, it takes longer. So the blockchain in itself provides that transparency, has the ability to make things faster for financial institutions. I will say this from having worked on Wall Street for years and having many different compliance officer friends that work in the industry. Every single big bank has an innovation lab today that is working to learn and create a format of something that will help their operations from a compliance perspective get faster. Every single, from Chase, where Jamie Dimon said, blockchain is a fraud, but apparently they did have a innovation lab, and every other bank that is out there has that. So they're all interested in trying to make their operational aspects much faster in identity verification, because that's where it takes a lot of time for the front office folks.
So I'll just add kind of where we're seeing this now and probably where it's going. So if any of you have, and I'm sure most of you have, signed up for an account on an exchange, you've probably been through the process where you have to take a picture of yourself holding your passport or your driver's license, then you have to scan in some other documents. And so when we're talking about KYC, that's part of the process that you go through. And largely why that's needed when you're dealing with an exchange, obviously, is because you're linking your bank account information with this exchange so you can purchase these crypto assets. Now, obviously, there's tremendous inefficiencies with that system, but that's the system that's in place today. Is there an opportunity for blockchain to solve some of these inefficiencies? Absolutely. And in fact, I think KPMG has already launched a system in Singapore, which HSBC last year, to kind of demo what it would be like to do a KYC system on the blockchain. So I think there's a tremendous opportunity to revamp this area. I think that blockchain brings a lot of promise, but at the same time, we do have a current infrastructure until we move towards a system that's blockchain based. And obviously, part of this panel is to shed light on ways to deal with the current infrastructure on KYC.
And if I may, from interacting with regulators, the regulators are also hesitant on some of these tools that are in use today, where facial recognition technology is being utilized for identity verification. They're not. They hear it from the financial institutions or the compliance officers in those institutions talking about various vendors that they're utilizing in combination with the traditional methods, and they're still hesitant to see how are you able to verify the identity of an individual. One of the things that they do know that from case record of Silk Road being the most infamous case that was out there, where blockchain technology and cryptocurrency was first discussed, they were able to identify their own agents. The law enforcement was able to identify their own agents from the actual case, who were transacting inappropriately and were brought to prosecution in that particular case by having the transparency. So it was not anonymous and where your identity is masked. They were able to identify their own agents in that process. So I think regulators and law enforcement agencies are recognizing it, but they're looking at it very cautiously.
So think of it this way, as if you have all your information in your home. That information is secure, only you have access to it. And that information is sent out to nodes. Those nodes will then distribute the information out to whoever is looking for verification. People who need verification will ask for a certain amount of access. That may require a driver's license. It may require a driver's license, a passport, a credit card. But not only that, what will also contain, it will contain things like your transaction history. So I'll give you an example. Currently now, credit scores are done by FICO. So that's what everybody looks to as the standard. In actuality, it's not a very good indication of your ability to repay. In fact, there was a recent article saying that your credit history through PayPal is more reliable than your FICO score. So by being able to utilize blockchain for your transactions, that will have a transparent record on the blockchain. Your pieces of information will be recorded on the blockchain in different hashes, and that will be there for access, as well as your transaction histories for various things that you do. It's also regional. So what I mean by that is because you're within a certain area, and even with your transactions, let's say you take a trip to China and your transactions are logged and it's keeping a log of it, it makes it even more difficult for somebody to claim your identity, because your history becomes so personal that it's virtually impossible. Plus, it's all recorded, it's transparent, and people have access. So that's where the future is going. The other thing is that you won't need to worry about people, trying to determine what you're doing, whether it's right or it's wrong. It's all there. It's all transparent. The governance aspect, will not really be necessary. And in terms of compliance and everything else, it's going to be a lot more seamless.
If I may, I think the point is absolutely correct. I think the blockchain, the identity verification on it, is definitely the wave of the future. The current process certainly is cumbersome. What the challenges that we're facing today is the amount of time that it's going to take us to get to that point. I've been working in financial crime in both public and private sector since the USA Patriot Act, and it's taken us 18 years. I'm here today, and 18 years we're still talking about automating things, and it's a little embarrassing that from my perspective that we couldn't get there fast enough, that we couldn't make this a process much more seamless, where today we have the risk of fraud, your synthetic identification, where part of the information is correct, part of the information is fraudulent. That is a prevalent fraud that happens today. What blockchain allows to do is to erase that aspect, right, or curb that aspect. All of our identities, if we were all with Equifax, all our identities are out there, and government workers. Mine has been out there for decades. I am a former federal government worker, so federal systems were hacked, and it's on the dark net. All of people's identities, but it is this aspect of how you try to manage your own identification and your own transactional history that is the important piece in it for individuals, and I think it will benefit entities as well in the future.
I'll just add to that, in terms of moving forward, it might actually turn out that the states actually may adopt policies allowing for blockchain before the federal government does. I mean, a lot of states, including California, Nevada, Arizona, New Jersey, Delaware, have passed blockchain legislation. I mean, the states are very excited about this. They want to put government records on the blockchain. They want to use blockchain. And so it may turn out that the state regulating agencies actually may prove to be quicker in moving on to a blockchain-based KYC system before the federal government does.
I agree. I mean, there's so many records and so much paper that's wasted on trying to keep, years and years of records. In AML, you're supposed to keep records for 5 years. And then based on your financial institutions policy, that could be 7 years or 10 years. And then if you have a global institution, it could be longer depending on whatever the home office is. So imagine trying to keep records for decades like this, and local governments have going back 30, 40, 50 years, municipal records. I think it really has a benefit for a lot of different places.
Yeah, it's no different than back in the 70s where most records were kept on microfilm.
Yeah.
It took about 10 to 15 years to actually get everything computerized, and it's a similar process. The other challenges are, from a development standpoint, is computing power, because there's algorithms that need to be implemented, and so developers are working on the most efficient way to be able to implement the kind of infrastructure that I mentioned, to be able to minimize the computing power. I don't think people realize what the amount of energy that we're using to do all of this. We don't have enough energy with our current infrastructure to power even 30% of the electric cars that we would have to replace the existing cars. And when you talk about computing power for blockchain and everything else, we really have to take a look at our energy infrastructure worldwide and how we're going to be able to handle all of this. So there's a lot of things that developers are looking at. And fortunately, we have people who are very interested and motivated to change not only the infrastructure, but to have social impact and really make a difference for people on this planet worldwide.
So as identity management and verification processes continue to evolve, as it is with everything, the regulators are a bit behind trying to keep up with technology. And oftentimes people ask me, I shouldn't have to do this and I shouldn't have to do that because technology does it for me. And the question of should you have to do something and do you have to do something are completely different. So thank you very much to our panelists, and I think we have time for a couple questions.
We can accommodate, I think, 2 quick questions, and then we're going to have a break before our next panel. Do I have a question? Over in the back.
Thanks. Okay, so my question has to do with the regulation of virtual currencies, money service business, money transmitter. If you are a blockchain token issuer working with something like a microtransaction model, maybe people are paying for content on a direct view, and the whole point is being able to then take that token off of the system and turn it into fiat so you're getting paid for what you did. What would you as that issuer do given the current environment? I mean, it sounds like you're going to have to register with FinCEN, register with every single state. You guys are all nodding yes, and that's got it.
I speak globally on a lot of different topics, and it's just comical to me how everybody is trying to find a way to circumvent, regulations and everything else. The sooner that we get people on the page to just acknowledge, what is in place, and let's go with the course of least resistance to develop the technology instead of finding ways to make money and benefit, the better off everybody's going to be. So I think that if anybody has a question in your mind about whether it's right or it's wrong, it's probably wrong. The best thing to do is, hope for the best, prepare for the worst. And, we need, as a community, we really need to work collectively to make this technology happen and not get bogged down in all these conversations that are not really moving the technology forward. I would encourage everybody here to get involved in one way or another. You want to do an ICO, that's great, but you need to be mindful that it's a movement of scale where we're trying to impact people socially and change people's lives, and that's what we need more of. And in order to do that, we need cooperation and collaboration, and not people who are doing things, interfering and take up time, you know, from the SEC and other regulators. It's just wasting time and money. So that's why we're all shaking our heads, because we always get these questions.
So I will say, my recommendation would be hire yourself good compliance people, get good legal advice, and make sure you register, because it's in your best interest, or whoever your client is. I'll give you an example. Ripple XRP, read that case. They weren't registered, and when they did register, FinCEN made them a really big poster child for the industry by fining them, and it was for not one of the things was for not filing a suspicious activity report. All of us should be very familiar with this. It's in the news now, all over the media about what money laundering is and what suspicious activity reports are. So that's what got Ripple in trouble. Western Union, one of the largest money services businesses in the world, settled in November 2017 with all of these different law enforcement agencies, starting from the DOJ to consumer agencies and state reg. They settled with New York DFS, which is a very powerful regulator, for $60 million just recently. MoneyGram also settled for, again, an MSB that's registered all over the country, globally. Recently settled. So if those are not enough examples, there's plenty more that I can share with you, and certainly recommend that please don't try to waste the time of yourself and your clients, but just try to, again, to the comments, we need the technology to get there. All of this stuff, other stuff is ancillary. So it should kind of pave the way for the technology to move further.
Yeah, rely on a good lawyer if you're uncertain. If you're worried about compliance, get people. There are third parties that do that, and just rely on them. That's what they do, and they earn their money well.
Excellent, and that actually is going to be our time for this group. So thank you all so much. I know that a few of you have questions. If you can please try to speak to our panelists after they're all set. Thank you all so much.
Terrific.
And we'll take just a 5-minute break between the next panel to give everyone a chance to stand up, stretch. We'll be back in about 5 moments. Thank you.